All right, now we're going to get to probably what's on some of your minds is why would a company choose one over the other? What is the benefit of choosing one over the other? Now remember, if you're a business that can use specific identification, then you're probably going to use that. But that's very limited, really high price, low turnover goods. Why would a company choose LIFO over FIFO or weighted average? That's what we're going to get into in this video. So the advantages. What are the advantages? Well, SI, we've talked about this before. It matches the cost of the item with the revenue it generated. It gives you the most accurate representation of what happened because it's specific. I can't say that enough. I guess you would say it is the most accurate. Okay. FIFO, first in, first out. The advantage here is that the ending inventory, remember, FIFO-lish, the last in still here, so the ending inventory is the one that we just previously purchased, approximates its current replacement cost, meaning it is the closest to the current cost of what it is today. So that means that your assets are going to be more true, a little bit closer to accurate, because it's the ones that you just purchased the most recent. Okay, LIFO is going to give you the expenses approximate the current cost. So because we're getting rid of the most recent ones, that means that my gross profit is probably going to be more closer to true because I'm getting rid of the last ones that I just purchased. They're closer to what market cost is today. And then the advantage to weighted average, well, because it meets in the middle, it smooths out any erratic changes, cost changes. When it comes to businesses and investors, they tend to like smooth things. They don't like huge fluctuations and a lot of volatility. They like things smooth. So this really does give this ability to see a very smooth cost transition when it comes to weighted average and inflationary or deflationary periods. And so that's why a company, and this is what I call the book reasons of why a company would choose one over the other. And the next one we're going to talk about tax advantages too. So appreciate it.